Today, we're going to be discussing one of the greatest investment books of all time, Benjamin Graham's The Intelligent Investor. The principles of this book can help you become a very successful stock investor and make you a ton of money. Right now, you might be asking yourself, who is Benjamin Graham? Benjamin Graham at Columbia University was the teacher and mentor of one of the greatest investors of our generation, the one and only Warren Buffett. In fact, most people do not even know that after graduation, Warren Buffett worked for Graham's investment company until Graham retired in 1956. The book's general idea is to educate investors on how to make money in the stock market and avoid making the common mistakes that most people tend to make. Graham's book, The Intelligent Investor, is considered a classic in the world of investing and offers readers a wealth of practical advice on how to become a successful investor. Here are some of the best tips that I believe the book offers. Number 1, understand value investing. Graham is often called the father of value investing, a strategy that involves finding undervalued stocks and investing in them for the long term. The goal is to buy stocks that are trading at a discount of their intrinsic value. In the book, Graham describes various methods for calculating intrinsic value, such as looking at a company's earnings and assets. Every successful investor needs to know the difference between intrinsic value and current stock market price. Intrinsic value is what a company is actually worth, or what the stock price should be trading at. The current market price, or market value, simply refers to the current market price of a stock at that current time. The ultimate goal? To find current prices well below intrinsic value. Remember, Graham states value is what you get, price is what you pay. Number 2, always do your homework. Graham believed in the importance of research and due diligence in investing. He urged investors to carefully analyze a company's financials, management team, and competitive landscape before making any investment decision. Graham is quoted as saying, "Investing is most intelligent when it is most businesslike." Number 3, invest in companies with a strong track record. Graham argued that investors should focus on companies with a proven track record of strong financial performance. To be a successful investor, you have to understand financial statements. A few examples in the book are researching earnings and dividend records. Graham believed that investors should focus on companies with a low price to earnings, which is PE ratio, which is calculated by dividing a company's stock price by its earnings per share. The book states that a low PE ratio could suggest that a stock is undervalued and has room for growth. Graham states an investment operation is one which, upon thorough analysis, promises safety of principal and a big return. And number 4, Graham emphasized the importance of patience and discipline when investing. He urged investors to avoid the temptation to try to time the market or chase after hot stock tips. Instead, focus on building a well-rounded portfolio of solid, stable companies. In conclusion, I want you to remember, a stock is not just a ticker symbol. It's an ownership interest in an actual business with an underlying value that does not depend on its current stock price. The current stock price is what you are paying to buy ownership of that company. By calculating a company's intrinsic value, you will know what the company is actually worth. Benjamin Graham's The Intelligent Investor is an invaluable guide for anyone interested in investing or trading in the stock market. It offers many practical examples and details that can help investors make wise investment decisions. This book provides a comprehensive guide to the principles of value investing, and the practical advice it offers has guided many successful investors over many years. By following its recommendations, you can build a successful and very profitable portfolio that delivers real value over a long term. We hope this information helps you live a life of financial happiness. See you next time.